Right, cool. So like I said yesterday, committing to do my trade breakdown. So it's now 23rd of October. I'm going to run over the trades that I took today. I did take a total of 3 trades, all on the same pair. So it's Euro USD. I'm only going to go over 2 of them because one of them was actually against my plan, and I don't want to build any bad habits by reviewing trades that were against my plan. I have journaled it. That is for me to learn on. There is nothing that I can give anyone from that other than it was a trade that went against my plan, and therefore don't need to talk about it. So there was 2 trades that I took, 1 loss and 1 win. That's just hit take profit. So I'm going to run over those 2 trades, exactly why I took them, and yeah, we'll go from there. So seamless transition time comes from this side, doesn't it? And I was too slow with the finger. Cool. So looking at Euro USD right now, if you'd watched the video yesterday, I outlined why currently I was bearish on Euro USD, why it makes sense to keep selling Euro USD, because on the higher time frames, daily, weekly, we had breaks of structure, we had liquidity sweeps, breaks of structure, reasons to keep moving to the downside. Now looking at the hourly, that still looks like the right thing to do, but as we can see, we got this nice push downside. And then after yesterday's sell-off, we then had New York sweep London low and an explosive push to the upside. And what that did is created this bullish internal range inside this bearish trend. So we've got this bearish trend right here, markets moving higher highs, higher lows. But then what we've had is an explosive push to the upside, which could indicate to us that the market now wants to start pushing higher. Now, if we are going to start pushing higher, I think it would only be in the short term, because overall on the daily and weekly, we're still bearish. So what we could just be seeing is these lower time frames basically pulling back to deliver a premium price, sweep some buy side liquidity, and then continue lower. So if we do start to see some sort of bullish movement, we can still trade it. We have to be aware that higher time frames are still telling us that we are bearish. So we just need to be cautious, as I was here. Yeah, so with that in mind, seeing that yesterday we had that nice bullish push to the upside, makes sense to take some buys, provided our lower time frame structures can marry up. We sweep the relevant liquidity, and we'll have a look. So this morning, what we saw is that Tokyo low had already been taken. It was taken during Frankfurt. Now, like yesterday, and I outlined in yesterday's video, Tokyo high had already been taken. That's fine, as long as we can then find reasons to sell during London session. Sometimes people like Tokyo high or low to still be there when they come in, but if it still goes along with your bias, like in this case, I wanted to buy. If the low is gone, that's fine, as long as the high is still there, gives me a good target. So yeah, Frankfurt didn't really do a lot, took Asia low, didn't really see any breaks of structure or anything like that. And then we started to see a bit of consolidation into London. We didn't really sweep any liquidity in London. You could say we swept this minor liquidity that was in here. But then what we saw is a really nice push to the upside, breaking this high right here. So we pushed up, made this high here, swept liquidity from this low that took Tokyo's low, and then we saw a bit of a kind of consolidation. This is a relevant price action. And then after that sweep of the low that took Asia low, we had this nice explosive push to the upside, which for me was nice. That was something that I wanted to see. So then I was looking for opportunities to enter the market. Now, at this point right here, I believe I traded off of this 15-minute demand. But I'm not actually sure how I've ended up with my stop not being low enough. Oh no, I do remember. I remember. So yeah, we entered into that 15-minute demand. That was the 15-minute demand that gave us this break of structure right here. So you can see that we've got the break of structure right here, and it was delivered by this 15-minute demand. I wanted to get into the market, so I was like, I thought, we're going to continue with some momentum. So I entered off that 15-minute demand, and originally my stop was, I believe, just here, so just below. But then what ended up happening is that after I entered into the market, I then refined this demand into this 5M demand right here, which is why it was like that when I came back in, or when I opened it up. And yeah, so I assumed that we were going to maybe bounce off this 5M, which is why I refined it. And we did get a nice bounce, but every time the market seemed to push higher. So the 15 gave us a beautiful bullish close. At that point, I was like, cool, we're going to the moon. That's it. I'm going to retire my family. We just started to see the bears come back in. So the momentum just wasn't there. And after we got, you know, real slowdown, no bullish pushes, we got this big, strong bearish candle. For me at that point, I was like, right, I'm just going to cut my losses. There's no point me staying in this trade any longer. It's quite obviously not going to continue higher, because if it was going to continue higher, we would have seen that by now. You know, at this point, it was 10:50. London session volume starting to die out. If it was going higher, it would have gone higher. So yeah, closed it out for I think it was roughly a 0.8% loss. So could have just left it to 1%, but you know, cut your losses, let your winners run, that kind of whole shebang. So yeah, basically just that was that. Still wanted to see bullish. I was still looking for buys on EU, regardless of the fact that that had just happened. I wanted to wait for New York and to see what we got. So then when I took a look at the price action that we had here, you know, like I said, we swept London low, nice liquidity sweep, break of structure, new impulsive push to the upside. I noticed that we had this 30-minute demand right here. Don't really use 30-minute demands, but notice that there was a 30-minute demand here with a fair value gap just below. Looked pretty good. And then what I did is basically looked a little bit lower, refined it down. Saw there was a lovely 5-minute one right here where we can see we had a little tiny bit of minor liquidity sweep and then a really nice break of structure, impulsive break of structure delivered by that 5-minute demand right there. So it makes it valid. But because I'd already taken 2 losses technically from the trade that I'm not going to speak about, that never happened, that I never took, I wanted to be extra cautious and wait for confirmation if I was going to take a trade in New York. If there was no confirmation, it wasn't going to happen. So this second trade that I took was a, I would say, entry model 2A. So I have different entry models. This is entry model 2A, where I'm waiting for further confirmation on the original entry model. So normal entry model would be that we wait for the, so in this bullish instance, we wait for the previous session low to be taken in London low, which got taken. And then we would look for a break of structure, and then we would enter with a limit off of the demand created from that. So we can see that we tapped into that 5-minute demand. We then made a nice push higher right here. And then we created this minor demand right here. And then that would have been usually where I would enter, but because I had taken that loss earlier and I was a little bit unsure, because I'll show the DXY in a minute. I wanted to wait for extra confirmation. So what I waited for is market to push off of there, break more structure, create a new demand, which was this little demand in here. So we created a new demand. And then once we entered into that new demand, so the second leg of the, so a second break of structure, I then waited for the 5-minute to indicate to me that it was ready to push higher. So in this instance, I waited for a bit of a slowdown, and then I waited for a 5-minute engulfing candle or some sort of bullish candle to indicate let's go, which was this candle right here. So I entered just before the candle closed. And yeah, so that was the entry I took there. Stops below, which gave me a 5-pip stop, whereas this one I think was about a 7, so 5-pip stop. And then I was just targeting London high, and literally while I've been recording this video, we did actually hit take profit on it. Yeah, we did. So we can see on MetaTrader right here, we hit the take profit there with 3.1%. So that was fun. Yeah, so we hit take profit on that one. So overall, actually only up 1% for the day because of the 2 losses, but we're ignoring one of them. So yeah, we're only actually up 1% for the day. But those were the 2 that I took. One of the reasons why I was slightly apprehensive about the buys on EU, or what I thought I was going to see happen, was that if we look at the DXY, which is something I pay close attention to, we had this previous daily high sat literally right here. If we go down to the lower time frames, we were sat staring at it most of the day. So come New York Open, you can see we stabbed higher, but then for some reason we just didn't take it, and that's fine. You're not always going to sweep liquidity, you don't always have to. So we didn't sweep that liquidity, and we saw this really strong rejection from it, which was when I was about to enter on EU. That actually added confluence for me for the fact that this is the second time, third time that we had gone close to this previous daily high, and we just pretty much ignored it. So yeah, that was kind of a confluence for me. If we were going to take it, we would have taken it in London, and if we were going to take it at the start of New York, we would have taken it at the start of New York, but we didn't. You know, we just ignored it, which could be a trap. You know, it could have trapped some traders or something like that. But yeah, it is what it is. So those are the 2 trades that I took today. Pretty happy. And yeah, learned a couple of lessons. I entered again the trade that I said I wasn't going to talk about. I actually entered after closing out that other trade when we were inside that 5M demand. I entered again off that. But I closed that out again at a minor loss. So actually, no, I'm up more than 1% today because I actually only closed the other one out at about 0.5% loss. So we're actually up 1.8% today because those 2 equated to a 1.2 loss. So yeah, really good day. So that's great. But yeah, those are the 2 trades that I took and the reasons why. 3 trades that I took. So yeah, that's that.